I think normally one would expect sort of bear market rallies and some form of capitulation to try and form a bottom. But I think realistically, with the amount of policy support and the sort of central bank bazookas that have been coming in, I think it's reasonable to see that there is some form of bottom in. However, I do think the next few weeks are going to be incredibly testing because there's a lot of hope and sentiment in this rally. High-frequency economic data is going to be very, very challenging, and we are going to be moving into a very challenging earnings season.
Can I ask you about the Chinese data, which has been very much a catalyst for driving those Asian markets, and it feels like it might be a prop for the European markets this morning. What do you make of the fact that we had data that was weaker, but it wasn't double-digit weaker?
Yeah, I think as we've seen the virus sort of sweep east to west, and then as we've seen the infection rates sort of and the curves flatten down east, you can see the economy is opening up ahead of the West and the rest of the G20. I think in perspective of China, the way in which they have a much more of a sort of command and control directive on their containment, I think it's not surprising that some of the sort of economic data coming out of China is sort of better than expected.
Well, we've mentioned some of the stimulus provided from the US, from the central bank, from the government. We've mentioned the data out of China being a positive catalyst. The other factor that investors are looking at has been these tentative moves across some of the European countries to restart their economies. Do you think that this is a positive, or is it just an early sign that the market should not read too much into because we still don't have a vaccine or a treatment? So effectively, we could be facing a wave of coronavirus infections.
So, yeah, I think it is a positive. It has to be a positive because if you're trying to create a scenario of what shape recovery, a U, a V, an L shape, you need to first have some assumptions on whether the economy can start functioning. What we've had is literally a handbrake stop on the momentum of all these economies. And I think it's good news that we can start getting some activity back into the demand and the supply chains and can start lifting activity, although it will still be impaired, at least in the second quarter and the early parts of the third quarter. But it will sort of underline the thesis we could have more of a V shape than a longer protraction.
Just give us a sense of your strategy right now, because I was poring over a report that you'd issued back on the 23rd of March, right around some of those market lows, and you were still pointing out then that you hadn't seen a meaningful correction, not distressed enough levels to force you to just jump in and ask questions later. What do you make of the markets now after a very strong bounce off the lows that we've had, but still a lack of clarity about the structural hit that some of these companies could be weathering in coming weeks, months and years?
Yeah, no, absolutely. I think, so from a risk perspective, we've been very much favouring the credit markets and the high yield markets as the first sort of building block of risk in portfolios. So European high yield, we've been very keen on policy support and investment grade has flown sort of flooded over into the high yield space, and we've seen that sort of spread compression between high yield and investment grade in Europe. And I think that's a very interesting way to step back into sort of risk into your portfolios. We've also had long-term exposures to some of the sectors in the equity markets, which we will be building on as we see volatility through these earnings season. And those will be the sort of tech sectors, the healthcare sectors that have been favoured pre-crisis and through this, and we think their earnings will be more resilient than some of the earnings we'll be seeing coming out in the next few weeks.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.